Hello, everyone. I think we are just about ready to start. So this is going to be the last live update of the week. We've been doing these 3 times a week now. Let me just put the risk warning up while I'm talking away. So we do the Monday, Wednesday, Friday, a look at the major markets, a couple of currencies, indices, gold, oil, and we'll have a look at Bitcoin as well this week, actually, because we saw the big fall in Bitcoin on Wednesday of this week. So we'll have a quick look at that. It normally runs for about 20 minutes, and it's really just catching up with what's happened and looking at maybe where the opportunities could be over the next few days. It's been an interesting week for all sorts of reasons. Pound moving around a lot on Brexit talks and some instability and division in the UK government. So we'll take a look at that. And see what that means. But a big level is held on the pound again. So I think that's going to be an interesting chart. But I think that risk warning has been up for long enough now. So let me just drag this across so we'll get started. So this is our trading platform. Let's just make that full screen. Let's start with the pound. Let's bring that up, because I think I was surprised actually, but I think yesterday was the biggest fall for 2 years in the pound, and I suppose it didn't move more than 200 points yesterday. I think yesterday morning, if we flip this over to a short-term chart, now look at the 5-minute chart, we'll see the size of the move yesterday. I mean, it started off, where were we? So the early hours of the morning, around about 7 in the morning, the market was trading around about 130.22, and then absolutely fell off a cliff when we had the resignations that started coming in yesterday morning and traded as low. In the end, by yesterday, I think just after Theresa May's speech, it slipped a little bit lower and it traded as low as, 127.22 in the end. So we saw almost, well, actually, no, it was a 300-point range, wasn't it? It was pretty much a 300-point range yesterday for pound US dollar. So it's a pretty volatile day for the pound, the most for a couple of years. So plenty of volatility there. But I think what was interesting, if we flip this back for a second, let's flip this back to the dailies. So I think the big level we've been talking about since August, since these lows in August, the market got as low as 126.60 pretty much. End of October, traded as low as 127, and yesterday as low as about 127.20, 127.30. So we are still seeing there does still appear to be an appetite to be a buyer for the pound, when we start getting back to this 126.50, 127 area. And things do look pretty unsettled. I don't know if you're watching this and you're not in the UK, you maybe don't follow UK news as closely as those of us who are, but it feels there are talks of perhaps a vote of no confidence. We had lots of ministers resigning, so it's pretty unstable from a political point of view. But the pound has held up okay today. So I think for me, assuming we don't get any massively bad news over the weekend, which, to be honest, is a big assumption at the moment, maybe we'll see next week the story will be of the pound just clawing back some of those losses from yesterday. But we'll do all this on Monday and catch up then. But I think for now, we are seeing this continue to be a floor. 126.50 to 127 continues to be a floor for the price. Let's just flip it over to an hourly chart and see what that looks like. You can see after the falls yesterday, relatively low volatility from 10 o'clock yesterday, and we're now back pretty much where we were about lunchtime yesterday, just above 128. So I think maybe next week we'll see further gains for pound US dollar. Let's take a look at the euro. Then I think we'll have a quick look at Bitcoin. Then we'll get into looking at oil. So let's flip this over and bring up euro dollar chart, because here we go. Let's bring that up, because there's that big level that the market did have a look below right at the beginning of this week, 113. And it was the lows. It's basically the lows from pretty much July 2017. So it did slip briefly to its lowest levels since July last year. But the story for the week, when we were looking at this on Wednesday, we're saying, well, maybe the trade is, if you think it's a false break, maybe the trade is to look for the euro to recover. It's squeezed a little bit higher, I suppose, since Wednesday lunchtime. since we were sort of looking at this. It's maybe, what, I don't know, 20, 30 points higher. It is still recovering. So after that break, I think the trend for euro dollar is still just about up. But I think where it will be interesting is if we see the euro sell off and we go back and have a look at those old lows. But for now, going into the end of the week, after pushing to that 18-month low beginning of the week, we have seen the story has been one of euro recovery, but been overshadowed, I think, by what's been going on at the pound. Let's have a quick look at Bitcoin just to bring you up to speed on the crazy crypto after the move this week. So Bitcoin, it's been a fascinating year for Bitcoin. We go back, this time last year was when the price was going parabolic. So this is a daily chart. So if we were looking, let's say August of last year, the price was about $2,500, traded as high as almost 20,000 in December last year. And of course, we've had the corresponding, the bubble burst this year, and it's been really dull. Plenty of these cryptocurrencies have been really dull. So there's a couple of requests for Euro, Sterling, and New Zealand dollar calendar. Yeah, we'll have a look at those towards the end. So if you hang on to the end, we'll take a quick look at those. But so pretty dull year for Bitcoin. But let me just put that out of the way. But we have seen 5,800 to 6,000 hold the price up. Since we had all that drama going into February, 5,800 to 6,000 held the price up until earlier this week, Wednesday of this week. I think it was 3 o'clock Wednesday afternoon. So there's the move. So really low volatility trading for Bitcoin for a while, but any weakness, as I said, back to the sort of the low 6,000s, bringing the buyers out, and then bang, there is the move on Wednesday. And as is often the case with these cryptocurrencies, the move is almost over as soon as it's begun. It was a couple of hours, and the market went from about 6.2 as low as 5,600. So we dropped 10% in a couple of hours. Did poke a little bit lower yesterday. We have seen, when we've had big moves in the past on cryptos, we've often seen the market just flatline afterwards. I think the pressure behind this has been this Bitcoin Cash hard fork. I must admit, I don't understand the technicalities of it, and I don't really care. It's more about market sentiment. And I think with Bitcoin this week, slipping to its lowest levels since October 2017, from my point of view, there's no reason to be a buyer. We've had a market that's been dull all year. It's broke through support over the last couple of days or so, and it's a market still under pressure. Now, if you're a long-term holder of Bitcoin and you think it's going to change the world and it's going to get hit 100,000 in the next 5 years, you don't care too much about the short-term fluctuations. But I think from a trading point of view, it just looks weak. It's a market that seems really prone to panic. So if we're looking at next levels for Bitcoin, 5,000, I did a video earlier this week saying 5,000 was an obvious level to watch. And I think that's still the case. The 5,000 level is the next support. I think if that goes, there's a risk maybe we're going to go back to these old lows from September last year around about 3,000. So, but it wouldn't surprise me if it just goes boring again now for weeks after this burst of activity. Yeah, but it's a market that's still under pressure. I think if you want to trade markets, there are much better markets to trade than some of the crazy cryptos at the moment. But I thought we'd just do a quick update because we have seen that big support gone this week. Okay, so that's that. Another interesting market has been oil. Let's look at that. We were talking about this on Wednesday, because I think I said 55 was a level to watch, because the decline has been massive in oil from October, $77 a barrel, to this week, Tuesday this week, 55. It's moved 22. It's almost 30%, isn't it? Not far off 30% slide in about 6 weeks for the price of oil, coming off a 4-year high. And I think we were looking at it this week and saying, and I said, well, there's no urgency to buy, but if you're thinking about a level that maybe this weakness will stop, 55 had been a level almost a year ago. It had been support. So far, it's held, but I think that the next couple of weeks are going to be really interesting for the price of oil. If we flip this over to an hourly chart, okay, let's maybe 4 hour is a bit clearer, just to get all of that move in from those highs, looking something like that. And if we just plonk our trend on it, even though the price has moved, what is it, a couple of dollars in recent days, $2.50 in recent days. What's interesting is that we're still within that trend. Yeah, so technically, this, like the moves here and here and we didn't have any others, is just to move against that big trend. Yeah, so the expectation is, and this is why I think next week will be interesting, for the price to start to run out steam again. So I think the immediate level to watch, perhaps these highs just before it fell off to 55. So I think 59.5 to $60, or even up here, up to 61.5. Let's say 59.5 to 61.5. I think is the zone to watch going into next week. Okay, we've seen, I mean, the rally looks tiny, clearly, against the size of that fall, but we've seen a bit of a move, a couple of dollars rise this week. It hasn't actually fallen off a cliff after Monday, but you would expect it, I would expect it to run into some problems if we do get as high as 60. So I think next week will be an interesting one, I think, for oil. But we're ending the week on a more positive note than we were on Wednesday. If you wanted to, you could draw, we do have a little recovery trend going on, which I've drawn in completely the wrong place. That looks something like that. So that's still chugging away, but clearly we've got that bigger trend off those highs. But yeah, we'll come back to that on Monday and see where we are on Monday and pick up on some levels for the week. So that's crude oil. Let's do gold. As we're on a commodity, I do think gold. I think gold may well be one of these markets that, famous last words. We look back on it in 6 months' time and think, oh, we really should have bought at 1,200. Because I'm just wondering if the strength we're seeing after the big slides in gold is really the start of a much bigger recovery. So let's flip this over to the dailies. There's the arrow. I've got long-term viewers will know I delete that every time and it comes back. So I think for gold, we had the big sell-off off the April highs from about 1363 down as low as 1160. So a $200 fall in the price of gold was that pretty much 15% from April this year. But it's continuing to have a go at a recovery. Let's pick this up. So here we go. We pick up on there. It's looking something like that. Yeah. So we're early days. We went oversold on the price of gold, slipping back to 1,200 at the beginning of this week, and the market's bounced back, and that trend is still hanging on. So I think for me, we have broken out of this downtrend. The recovery pushed higher, sold off, buyers have come back in. So for me, in the short term, assuming this trend is going to continue, the target is going to be for a run up to $1,240 initially, and if that breaks, looking for it even higher. But I think for now, that recovery for gold is still chugging along quite happily. I will come to these markets that people are asking for in a second, but before we do that, let's just take a look at stock markets. It's been a bit of an odd week. I think it's been really. I mean, we started the week really weak. I think Monday the Dow fell around about 600 points on Monday, didn't it? But we did see something of a recovery yesterday. This is the S&P 500. So this is the broader US stock market. Clearly, with us, it's a 24-hour market. So the candle you can see there, this is what's going on today. This was yesterday's price move. We'll look at the shorter term chart in a minute. But yesterday, the market slipped lower again, but did reverse during the day and closed pretty near where it closed on Tuesday. Okay, so we saw something of a bounce back yesterday, but I must admit, I'm surprised how hard these stock markets have slid this week, but they have been under some pressure. Let's pick up on the hourly chart. So here we go. So there's the move yesterday, 3 o'clock yesterday, UK time, down to the lows, and then we did rally into the close, but didn't break Wednesday's high. Okay, so we saw a good turnaround during the day, but I don't think we broke any levels. So I think, again, maybe we'll have an interesting session today. So let's see what happens if these markets come under pressure today. Do they break below yesterday's lows? Okay, so I think it's been weak, and we're not exactly massively positive going into the last day of Friday, last day of the week. We'll come back to it on Monday and see where we're trading. So stock market's still very much under pressure, although we did have a positive turnaround for most of the session yesterday. Let's take a look at the NASDAQ, because the NASDAQ, has been hard to hit, I think, than some of the others. I mean, there were worries earlier this week about Apple, I think, because some of Apple's suppliers have been coming out with profit warnings. So the concern is that the iPhone isn't selling as well as it could be, or as it has done in the past. There's the NASDAQ yesterday. So again, this is the hourly chart. So again, there's that 3 o'clock turnaround yesterday. The NASDAQ slipped to 6.7, but then rallied. You know, good 200-point rally off the Nasdaq yesterday. But what was interesting, runs out of steam ahead of Wednesday's highs at what 69.20. So let's see. I think so. So for me today, the levels to watch these highs. If we get a breakthrough here, we're going to see a more positive end to the week. Watch how it performs down at lows. Watch for a bounce. If it breaks below, it's a negative end to the week. We'll have a look on Monday, and we'll see how these markets perform. Just a couple of things before I look at those markets. We've uploaded a video today, so I'm just dragging our YouTube channel in here. So you're watching this on YouTube anyway, aren't you? So if you go to our normal video page, we've started loading up. We have today a new series that I've done. I think there are 7 videos in this series, and it's all about trading biases and trading bad habits, you know, because we all know, I think, how important psychology is when it comes to trading. So we're starting a new series. So if you go to the videos bit on the Capital.com page, you'll see it there. So trading mistake number 1 is the first video that's gone up today. So 8 minutes long, dispositions. And what it's all about is it's the classic thing, people hanging on to losers too long and taking their profits too quickly. I couldn't get it out of my brain. So yeah, taking profits too quickly and hanging on to losers for too long. You know, the average, there was a study done a few years ago now looking at what a load of clients are doing with a retail broker. The average winning trade made, I think, sort of 100 quid, for example, but the average losing trade lost 200 quid, pretty much. So basically people's losses are twice as much as their profits. And that's not a successful trading plan. You need to be right an awful lot of the time to make money. So this first video in our series on trading biases is about that. So watch that if you have a chance. Okay, that's that. I'll have a look at these markets that people have asked for. So someone's asked for euro sterling. Let's have a look at that. I must admit, I've not looked at that for a while. So let's see, with all of this shenanigans with Brexit and the Prime Minister getting a bit of a I don't know, under a bit of pressure. Let's see what it's done to the euro against the pound. I'm guessing not much because the euro's been weak as well, but not surprising. Yesterday, this is a daily chart, the euro jumped up. So we saw the euro go from being worth 87p to being worth 88, nearly 89 by the end of the day. But it's just pretty boring. You know, euro sterling has been boring for a long time now, and this is going back just this year, well, actually over the last 12 months, more than the last 12 months, stuck in a range between 86 and sort of 90, 91 on the upside, and it's a pretty dull market. So I suppose you could take the view, if you really wanted to trade euro sterling, you could be a seller here and say, well, look, yesterday's move was overdone. Be a seller at 88.50 with a stop maybe above 89.5, looking for it to drop a couple hundred points again to the bottom of the range. But I think it's a bit dull market. The trend has been down, hasn't it? If we picked up on these highs from August, and we've just banged back up to the trend. So for me, my money would be on euro weakness, back down to the bottom of the range from here. Let's see what happens. New Zealand dollar, Canadian dollar. Let's take a look at that. I must admit, this is another one that I never look at, but let's take a look. New Zealand dollar, Canadian dollar. There we go. New Zealand dollar, Canadian dollar. Let's stick with the dailies. It's interesting. I'm not quite sure what's going on there with the data there. So what would you say about New Zealand dollar, Canadian? I suppose you could definitely argue the trend from March of this year has been down, couldn't you? So let's just plonk a trend line on that. So I think if we were looking at, but we have had the breakout. I mean, it's been rising for a while now. It looks really strong, doesn't it? I think, you know, it's only a couple of days ago it hit its highest level, the New Zealand dollar, since well, back here, since June. So for me, at least, on that, you know, it's overbought. So maybe we will see the market have something of a correction from here. But looking at that chart, it still looks like a buy the dips, I think, doesn't it? Clearly, none of this is financial advice, but that trend is definitely still up. Let's flip it over to the 4-hour chart. You know, if we see it selling off, I think there are some obvious levels to look at, aren't they? First of all, these lows from from 5 days in November, around about 88.50. But that recovery trend still seems to be very much in place, doesn't it? So that's an interesting one, interesting chart, that. And what did someone say? Nvidia, is that how you say it? Nvidia. I think they fell 16% in out of hours trading last night, didn't they? And I think, is it to do with the crypto bust as well? That I think they've been doing well selling whatever it is they sell, parts for computers, whatever it is. I think they've been doing well because of people mining cryptocurrencies, isn't it? So I think so. We're not showing the after hours trading here, but I think they fell 16%, so they'd be trading about here. Let's see where they open in an hour and a half. But do you know, I'm sure I've had shares in that in the past. You know, I can't remember. Anyway, let's see where they're open. They're going to open about here then if they follow through with last night's move. And I think it's always interesting when you see a knee-jerk reaction like that. You know, has the market overreacted? So I think not with this one in particular, but an aggressive tactic can be wait for the market to settle down. Let's say it gaps down to 160 today and then rallies back to 165. In an aggressive trade, you're a buyer looking for it to pull back into the range with a stop under the low of the day. You know, it's clearly it's not going to work all the time. Let's look at something like Facebook, which had its own sort of drastic moves earlier this year. But it's there we go. It's these sort of things, where the price. So Facebook in July got as high as $220 a share, gapped lower to 174, did move a bit lower. And then we saw a bounce back over a week. Actually, that's a bad example because it has just continued to sell off. But it's those sort of maybe, negative reactions to news. Does the market get overdone? But I think Nvidia did move about 15, 16% in out of hours trading. And the last one someone's asked for is natural gas. Again, I must admit, not one to look at. I think this has been, wow, that really has started moving, hasn't it? It's really interesting. Okay, I don't know anything about this market, apart from the fact it has absolutely gone up like a rocket over the last couple of weeks. I don't know what's behind that. You probably know more about this than I do, but that's a big break, natural gas. But that is a massive surge of volatility. I mean, I think personally, it's always a bit scary when markets move like that. When it moves, what is it, 20% in a couple of days? But clearly there has been, until it went ballistic, even over the last couple of months, we've seen it having some buying pressure. I think the problem is when we see markets like this, let's say you want to buy in, where's your stop loss going to go? And I think that's always the problem I have with these volatile markets. I suppose for me, if we were a buyer now, just above 4, the tightest I'd want a stop loss is under yesterday's low, arguably back here somewhere like that. But I think it is always difficult when we see markets go parabolic. So an interesting move. I'll have a look this afternoon and try and find out a bit more about why that happened. But I think that's it, isn't it? I think that is. I know there's a few more comments. Would you recommend cashing in crypto in the short term? We can't do financial advice. I mean, clearly it's up to you. It's a market that has gone down about 60% this year. It does show, I think, the importance of having either a physical stop loss with a broker or a stop loss in your head. I don't know. I think the trend is still down, but I'm sure there are people out there who could make a valid argument why Bitcoin is going to be 100,000 in 10 years' time. So, but good luck with it, whatever you decide. Okay. Oh, the DAX. Yes. Let's have a look at the DAX. I got stopped. I did trade this yesterday. I got stopped out of it. So the DAX is the most popular market amongst our clients out of everything. I think closely followed by the Dow, gold, and oil from memory. But the DAX is an interesting market because it's always volatile. If you compare the DAX to, say, the FTSE, I think the DAX is the more volatile market. I did trade it yesterday and got stopped out, only, of course, for the market to rally afterwards. But actually, it's coming off again today. It could be interesting this afternoon. So here's the DAX. Here's the daily chart of the DAX. So the most recent low is ahead of 11,000. So that's been something of psychological support. Did bounce back up near 11,700. So again, 700-point move in a couple of weeks. Pretty volatile by European stock index standards. What's going to be? I mean, you can see all this week. If we flip it over to an hourly chart, here we go. Did you get rid of that line? You can see not all of this week, but for what's the date today? The 16th. So for the last 3 days or so, this is where I got stopped out yesterday. We've had 11,290 to 11,320 has held the market up, and we're currently trading at 11,311 now. So I think in the really short term, if you wanted to trade it this afternoon, I think the level to watch are, let's make it a 5-minute chart, make it a bit more shorter term. Here are the lows from yesterday, and we have seen it sort of start to rally from 11.3 all this week. So I think it's an interesting one to watch to see if we get some sort of bounce back this afternoon. The really big level to watch is 11,250. That's the low from yesterday. So it hasn't been under as much pressure as US stock markets this week. It has almost held its own. It's been going pretty much sideways, the DAX, even though other markets, US markets, have been sliding. What would be interesting going into this afternoon, do we get some sort of bounce ahead of yesterday's low? Okay, let's see what happens. But we'll come back and we'll do it all on Monday. We'll see where these markets finish up today and have a look at them all on Monday. That's it. I think we'll wrap things up there. Thanks for coming along. Thanks for all the questions. I think more than happy to do stuff like this when we do these in the future. If there's particular markets you want to have a look at, I mean, clearly things like the fundamentals of natural gas, I'm not an expert on, but we can definitely look at charts and trends. So we will wrap things up there. Let me just put up my details if I can find it. Where is it? My contact details somewhere. So obviously to find out more about the company, if you go to the website, Capital.com. So the trading platform I use is clearly our trading platform. So we've had massive upgrades over the last couple of weeks to the trading platform. So you can open an account, open a real account, open a demo account. You can download our app from whatever app store you go to. Any questions after this, leave them on the YouTube video. I'll drop me an email. And have a look at that video that we uploaded today on trading mistakes. And that's going to be a whole series that starts coming in from next week. So as long as you subscribe, you'll get a little push off YouTube whenever they go up. But that's it for this week. Lots to keep an eye on, I think. See if the oil recovery continues. Do we see a bit of a more calmer week for stock markets and the pound, despite the craziness that's going on in the UK at the moment? I think that those lows continue to hold. Okay, have a good weekend, and we will do it all on again on Monday.